Good evening, everybody. All right. Well, today we saw some strength in the markets, obviously. The Dow up strong after the doji of yesterday. So what we basically had going on is kind of this wedge formation. No, man. I think after all the years I've been doing this, I could figure this out. But we kind of had this wedge formation going on. So it doesn't necessarily mean that today's strength is going to take us through the roof. It tells us we're probably still waffling in here, and we won't see anything major until he either breaks out through this upside or this downside. We can kind of see the same scenario over here on the NASDAQ. The only difference is this doji gap up represents a lot of strength coming into the trading. So that makes the prospect of reaching this level that much greater. Now, obviously, the first target's going to be here at the 50-day moving average, which coincides with that downtrending channel. But what that does, or what it should put you in a frame of mind of, if that's the right sentence structure, is that the market isn't selling off. It's still moving sideways, which means you still want to keep both long and short positions in the portfolio. Now, after a buy signal, if it confirms tomorrow, you probably want to scrutinize your short positions and anything that's showing too much strength, which we'll go through later. You kind of have the visual analysis to say, all right, there's buying going on in this short position, and the market is heading up. Probability to say, let's close out the short positions. Is this a morning star? Yes, somewhat of a morning star. The fact that they closed more than halfway up this candle. Additionally, the fact that they did a doji gap up tells you the strength of the morning star signal is probably still going to be fairly substantial. Now, some of the other aspects, such as crude oil, still in this slow, steady uptrend. Gold, that's a right gold chart. Gold kind of waffly sideways, not really going in any major direction. And what else would we be looking at? I guess those are the two that are going to affect the market. Do you consider that too as a best friend? Yes. Yes. So it doesn't matter what you call the transports. Let's see. What you call it. Is this the transportation index? Was it down 94 today? Huh. So it's still sideways mode. So overall, what this market is pretty much telling us is that that we've got the prospect of still trading in this wedge. This is the S&P 500 in this wedge formation, and not to conclude anything until they break out one way or the other. Now, that doesn't keep you from having good long and good short positions in the portfolio. As far as what we've been trading here for the last few days, you can see the type of patterns that are setting up. And this is why you want to identify the patterns, because they give you the advantage of putting yourself in situations where you know what the results should be and that your probabilities are that much greater that if you're in a pattern, like a scoop pattern, like our recommendation on TTS, Tile Shop, is that no matter what the market's doing, it's more than likely going to produce some good results. CLSD. We can see kind of the cradle pattern here, now the fry pan bottom. So as long as this stays above the T-line, you're probably going to be making some money with this with a much higher degree of probability. But the strong price moves obviously come from the strong signals, like a kicker signal, which has made HLX move extremely strong over the last couple of days. So anytime we see something, and this is why when we do our training on the quantitative signals and patterns, it's not so that you learn all of them. You just might want to take a few and kind of specialize in them. That was the same scenario why we went after BMW the other day, because of the kicker signal telling us we had extremely strong price move. And where was our stop? Well, if we knew that they could bring it back down below this level, that told us the bears are starting to take control. And where was the first target? Back here to the T-line. So again, this is not rocket science. If you just use some of the very simple rules that apply to what human nature does, and that the Japanese rice traders put it into a graphic depiction, your probabilities of being in the right place at the right time are going to be dramatically improved. McDermott, best friend signal, waffled around, but now what's it telling us? After they pulled it back right here to the T-line, they're buying again. The fact that they did this best friend signal, consolidated, now started to take it back up, tells you the bulls have decided to take control again. They should be moving much higher. EXAS, kind of the same scenario. Came up through the 50, pulled back to the 50, did a bullish harami today, and I think after hours it was trading up here. So basically what you have setting up is a J-hook pattern that is likely to give you a very high probability result. VRX, your classic fry pan bottom J-hook pattern. What's our next price move? This is wave 1. Wave 3 should take us up into this range. So again, human nature works the same way time after time. All we're doing is identifying the patterns that tell us where our probabilities are. We started buying CRZO because of the bobble breakout. Notice when it came up here it failed, but notice the other element to this pattern. They couldn't close it below the T-line, and when the T-line crunch pushed it back up through this level, that told you that there was still going to be a lot more upside in that trade. So just learning which trading patterns tell you where your probabilities are, you're going to have more high probability, not only of an upside trade, but a high profit upside trade. Again, a kicker signal on our recommendation on LRN today. Expect a 45-degree come off of here. Why? Because that kicker signal tells you there's lots of bullish strength. And what else did it do? Well, didn't fail at the 50, and it broke through this level. CLF, another one that's come up, pulled back. Now look at our bullish engulfing signal, Doji. What's our strategy on this one for tomorrow? Well, if this opens positive, more than likely we've got a bullish Doji sandwich, which is confirming our J-hook pattern. There you go, John. Yes. Bullish Doji sandwich. All right. So the biggies are what are bringing this market up. Best friend signal on Facebook. I know a lot of people like to trade Facebook. I just don't trade it all that much. But I would suspect on positive trading, because of this right here, and it doesn't matter what caused this. Some people say, well, that was caused because of the earnings report. Yes, but remember what the earnings report is illustrated in the chart. Yes, Amazon's up 100 points today, so I'm getting down to that one. But the fact that whatever announcement, whatever world event, whatever is related to a stock price, all we're doing is witnessing what the investor sentiment thinks about that stock price. Amazon did a nice little morning star signal right here at the moving averages. Right now it's trading up, I think, around 1620, up about 100 points. Now, is that tradable? Yeah, you can trade it, but what's more important is the fact that investor sentiment, seeing all these big moves in these big stock prices, are basically going to be saying, oh, there's still lots of buying going out. Let's continue to buy. Best friend, not necessarily an oversold. No, a best friend is, which one were we looking at? Yeah, best friend, if it gaps up, yes, remember, the oversold condition isn't that important. Apple is the weak sister of all of them. Yeah, Facebook, you can see what's happening here. Because now, what's your next pattern set up with this big best friend? Probably a little scoop type pattern. So remember, the signal is the number one criteria. You'd like to see them occur when stochastics are telling you things are oversold, but they will occur everywhere. NVIDIA came up strong after the hammer signal yesterday. So what's the relevant analysis of this one? Well, it closed right on the T-line. If this opens positive tomorrow, what's your probabilities? It's confirming this reversal, and it's telling you the T-line's not acting as resistance. More than likely, we're heading back up to the major moving average, the 50-day moving average. Netflix, what did this tell you today on positive trading? Pretty much that the 50-day moving average is acting as support. So if this opens positive tomorrow, what's it telling you? They're confirming the morning star signal, number one, and number two, telling you that the T-line's not acting as resistance. Where's your next target? Let's see what it does up here at this resistance level. And Tesla, nothing here yet. Even though it did a bullish engulfing signal, what is the trend of Tesla? Just drifting. There's nothing in this chart that tells you whether the bulls or the bears are in control. So it's the strong signals, like we saw in Micron today. Again, a doji, gap up through the T-line. Just that information right there tells you on further strength, you can be buying this one. Check out marijuana. Okay. IMU. What's the pattern setting up? Wave 1, wave 2. Notice, I say notice, it is clearly illustrated based upon the candlestick signals what the magnitude or what the urgency of the selling was. It was very indecisive. Doji, 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 spinning tops. And what happened when it got back to the support level? The indecisive selling now is out of the way. Start heading back up. Yeah, hold on to your individual stock until I tell Jim to do the double line. what are we doing? Oh, so J-hook patterns are working. Here's a bobble breakout on Home Depot. It's not a high profit trader, but at least you know from this pattern that you probably have more upside after the bobble breakout. Same as a fry pan bottom breakout on Tractor Supply, implying that there's going to be more upside. So the J-hook pattern, as we can see in Moss, came up, consolidated, wave 1, wave 3 should take you up into this range. And there are a lot of them are occurring over in the oil stocks. Fry pan bottom, got a little J-hook pattern, next wave to the upside. And PTEN came up, pulled back. So I would rather buy something here or here than buy something here, because this will tell you we're getting overbought. Start looking for a sell signal, whereas this tells you they've gathered steam again and we're going into wave 3. Knowing the bullishness going into the close, can you buy positions at the close that are closing above the T-line and forming signals? You can RT on maybe a half a position. So, but my contention is I would rather buy confirming the buy signal, because there's a J-hook pattern setting up. What's our anticipation? That if it opens positive, we can be buying. What we don't want to wake up tomorrow after buying right here today is that it opens right here. Now what do? You just don't I'd rather buy into strength, confirming the signal. I'll see if I can find a bobble pattern to illustrate. This is more of a J-hook than a bobble. Came up, pulled back right to the T-line. Now wave 3 is in progress. Another J-hook pattern, TNDM. I wouldn't buy here, but I would buy here, because this tells us what's happening as far as investor sentiment. Wave 1, wave 3 should be the same magnitude. Oh, they had an offering after close? Okay. Another one, very starting into wave 3. Home Depot was a bobble breakout. A bobble breakout is, it comes up, hits a resistance level, we see the sell signal, tells us they've failed at the resistance level, but it bobbles in here, it stays above the T-line, and then if it comes back up through the resistance level, it tells me the bobble breakout has occurred, you're going to have a lot more upside. So if you took this 50-day moving average out of here, you still have a J-hook pattern. So a bobble pattern is just a much more clearly defined J-hook pattern, telling you exactly where it resisted and exactly where it's going to break out. ICHR is your doji hammer gap up. Where's your likely target? Coming back up at least to the moving averages. So the best friend signal, is anything that is showing the doji followed by a gap up. This right here illustrates there's been a dramatic change of investor sentiment after they traded indecisively. Usually indicates there's going to be more upside. And not only more upside, but a strong upside. UCTT, same scenario. Doji gap up. So what we kind of imply or kind of suggest to people that if you're looking at the 12, 14, 16 high profit quantity, we've quantified which signals and patterns act the best. And there's about 14 or 16 of them. But we suggest people that you don't have to learn all of them. Learn 3 or 4 and become an expert in those. If you just trade the best friend, the left-right combo, the fry pan bottom breakout, the kicker signal, you'll have more trades than you'll ever be able to handle, and the probabilities of them not only being high probability trades, but they're going to be high profit trades. The best friend is one of your top ones. Let's see, LLNW. There's your kicker signal. Notice how this one started. Kicker signal. Then what happened with the breakout? Another kicker signal. What was the result? You're going to have more upside because that kicker signal illustrates a dramatic change of investor sentiment. A kicker signal today on AMD. If this opens positive, the prospects of it going higher are extremely strong. Let's see, I have a few more that look good. Silica. Notice this is the common trading pattern. Give definitions of 3 signals just outlined. I don't know whether I can catch them. You'll keep listening, Gil. You'll see them. But this is the normal trading, and this is why the visuals of candlesticks are that much more beneficial. Notice when they came up through the 50, what did they do? They pulled back right to the 50, acted as support. So when a resistance level is breached, they'll come back and test it to see if it's going to act as support. Notice what happened yesterday. A big bullish engulfing signal telling you this is acting as support. Now get ready for the next wave to the upside. Can you please explain? If it opens and trades positive, you mean entering the market where it closed or above the bar? Above the bar. If I was looking to buy this one today and I saw that it was opening positive, yeah, I'm getting ready to buy it. The best friend is a doji followed by a big green candle, or is it a doji followed by a gap up? It's followed by a gap up green candle. The best friend is a doji followed by a gap. The left-right combo is a doji followed by a bullish engulfing signal. What time today's recording will be available for replay? Whenever Jim gets it set up, RP. MDB, that's a morning star signal. This is your hammer doji. This is your very obvious morning star signal. So if this opens positive tomorrow, what's it telling you? It's confirming the morning star signal, which is one of the 12 major signals. And it's not resisting here at the T line or the 50. You're probably wave 1, wave 2, going into wave 3. Is it also a best friend? Not quite. No, a best friend is a distinct gap up. Now, if this had opened right here and gone up, yeah, that would still be your morning star signal with a best friend starting it off. Morning star signal on ALDR. Get ready for wave 3. And this I would still consider a morning star signal. A morning star signal can have either 1 day of indecision or 2 days of indecision. So if this opens positive, confirming the morning star signal and telling you the T-line /50 is not acting as resistance, look for the prospects of a wave 1, wave 2, going into wave 3. Now, INSY. This is where knowing what the nature of each candlestick signal illustrates what was happening on the pullback. Indecision, indecision, indecision. They weren't selling this off with any great decisiveness. Then they come back here, take it back up. Where do you think the next target is? The 200-day moving average. So, right now, with the markets still trading in this sideways range, we still have to see it break out. That doesn't mean we won't see a lot of waffling yet. Until there's confirmation the bulls have definitely taken control, that means you still want to have both long and short positions in the portfolio. So our recommendation on shorting INSY is still in effect, but what do we want to watch at this level? Well, right here, the support level. So why do we hang on to short positions when the market looks like it's acting strong? Because tomorrow they could open up down 150 points. This you'd consider not quite a best friend, but the fact that they gapped it up from the previous day's close still illustrates the same thing. That the bulls have come into this with strength, and that's exactly what you want to see after a doji. Today's session is a special one, not normal. Thus, night public session, right? Oh, RP, I don't know how to answer that. I guess any night with me is special. Oh, you got J-hook pattern in the sense you got a wave 1. Now a J-hook can either pull back and go up or go sideways and pull up. I don't trade this short term. However, if I do, are these recommendations to buy, call at the money, and sell puts at the money? Colleen, that's up to each individual what type of strategy they want to do. When I was buying this as part of the kicker signal, there were some accounts that I was putting the stock in, and there was other accounts that I was buying buying the options. Oh, up here, that's just on this system says stock.HLX. Let's see, what we were trying to do is show a few short positions. MD is a bearish kicker signal. So if this opens weaker tomorrow, remember, when they've kicked it in this direction, that pretty much tells you the bears are getting out of this or getting into this with great enthusiasm. CRTO, there's your bearish best friend. Doji, gap down. Wave 1, wave 2, wave 3, starting with a very strong selling pressure. Here's a clear example. This is Royal Caribbean. There's your left-right combo. Didn't close below or failed the T-line. Now you've got another bearish signal. So what's the common sense observation here? Well, if this is your downtrend, and you have a sell signal and a second sell signal, who do you think's winning? The bears are winning. You can be shorting this one. Will we be able to download these for future? Yes. Mark, how to get the link for this. Among so many stock with possible signs and patterns, what should one look for to have a winning rocket and not a turtle? David, that's why we do the quantitative training. Things such as the best friend signal is, or the left-right combo. Those are things that are usually going to put you in positions where not only are you going to be in the right direction, but with a very strong price move. There's other signals, like the inverted hammer, that is an extremely high probability that if it trades positive the next day, that you're probably at 95% or greater that you're going to be in an uptrend. Now, is that uptrend going to be like this or like this? Who knows? It's just putting you in position. So instead of trying to pinpoint which exact position is going to be a skyrocketing position, very simple money management technique, or my very simple money management technique is, if I've got a decent sized portfolio, I'm going to have 10 equal dollar amount positions on. So let's say I've got a $250,000 portfolio. I'm going to buy 10 $25,000 positions. Now, am I buying the ones that are high profit skyrocketers? Hopefully, each time I put on a position, that's what's going to happen. But the probabilities are, on any given day, based upon the signals telling me I'm in a good spot or a good position, I might have 6 or 7 of my positions trading positive, maybe 1 or 2 trading lower and 1 trading flat. But hopefully, out of the 6, 7 positions that are trading positive, one of them's hit big. So I don't know which one it's going to be. I just know that when I put those positions on, the probabilities are they're going to go in a positive direction, and the probabilities are that I'm putting myself in positions that have the prospects of having a big price move. Do you trade more than 3 positions, Mercy? Yes, I usually, my normal trading portfolio strategy is 10 positions. For 2 reasons. One, because each night it only takes 45 seconds to go through 10 charts to see whether they're still doing what they're supposed to be doing, or so I'm not spending all my time analyzing what each position, or Susie Orman says you should never have more than 4% of your money in any one position, which means you're supposed to have 25 positions on. And my criteria is most money managers can't even manage, or most analysts on Wall Street can't successfully analyze 6 positions. How are we going to analyze 25 positions? So I use 10, and that gives me 2 advantages. One, I can analyze my 10 positions in less than a minute each night, so that if I see something that looks iffy, I write down, all right, XYZ, if it opens over tomorrow, close it out. But the nice thing about candlestick scanning is each day I've got enough positions, 3, 5, 10, 15 positions that all look extremely attractive, that if I've got one that looks a little bit iffy, I just move out of that position and move into one of the ones that look very attractive. That way I'm constantly cultivating my portfolio to be in the best possible trade setups. And then secondly, if you've got 25 positions on, And if you were like me years ago, say, oh, I don't have very much money in that one, it doesn't look good, I don't really have to do anything, I'll see what it does. Whereas if you've got 10% of your money in each position, it's going to affect the results of your returns the next day. So it's small enough, 10% is small enough that if something drastic happens to any one position, it's not killing your portfolio, because hopefully if one bad apple during the day occurs, you've got 6 or 7 that are still working, keeping your portfolio pretty even or hopefully positive. And then secondly, oh, that's just great. Secondly, you can't even remember what your secondly was. Secondly, each one is important enough to affect your portfolio, but not big enough to kill your portfolio if one of them goes bad. John, the worst sale rule is only in regards to your taxes. It has nothing to do with buying and selling during the trading year. So a worst sale is if I've got a loss in XYZ and it's getting to be December 15th and I want to take that tax loss for this year, a worst sale is if I sell it and then I buy it back within 30 days, that means I really didn't sell it. And that's only for tax purposes. RT, yes, and that's kind of the illustration I put in my third book, where you want to keep the emotions out of your trading. That the biggest bugaboo we all have is our own emotions. And so everything that I did when I was learning how to use candlesticks was learning how to keep my emotions out of my trading decisions. And having an equal dollar amount in each position is one element of that. Because human nature, and I'm talking from my own experience, if I'm normally putting on a $25,000 position, and I look at a chart and say, oh man, this is a super chart, I'm not going to buy $25,000 worth, I'm going to buy $50,000 worth. I'm going to double because I know this is going to work. Now what you've done is you put your emotions or your ego into that trade. If that trade doesn't work, what's your thought process? Say, oh, this is going to work. I just have to wait for everybody that's not as smart as I am to realize why it should be working. And it keeps going down, keeps going down. So instead of you making a decision to sell one unit of your portfolio, now you're thinking, oh man, I analyzed this one and it's not working. So you sold it out 3 days later than what you should have, taking a bigger loss versus just saying, get out of this one unit and get to something else. Secondly, you got $50,000 in that position and $25,000 in the others. I can bet you dime to donuts you'll spend 90% of your time watching the $50,000 position and not paying attention to the other ones. So that's all a process to keep from letting your ego trade your account versus good analysis. Let's see. Let me pull up another chart here. ACHC, this is a good example of they were buying and then turned it around and started selling. That means there's going to be more downside. Where did you learn about candlesticks? John, about 40 some odd years ago, and I hate to think it was that long now, I'd been a stockbroker with Kidder, Peabody, Cowan, and Oppenheimer, and got out of the business because I realized that the brokerage firms had no more idea what made stocks go up or down than anybody else. And when I discovered that after 8 years, I got out of the business. Then I had somebody, I used to buy houses in Atlanta, Georgia, renovate them and resell them. So I worked out of the house, as I always have, and somebody dropped candlesticks on my desk. And I figured anything as sophisticated sounding as candlesticks wasn't worth the time or effort to look at. But they kept badgering me, and so I finally picked up whatever. Again, this was all back in print before computers. It was on the computers. And I looked at it and said, well, this makes sense. And the more I looked at it, the more sense it made. So at that point, I tell people back then I was learning this all on my own because there wasn't anybody else around that knew candlesticks. So I always tell people back then I didn't have anybody around to get a second opinion of whether I was analyzing things right. And I always say the only time I could get a second opinion was when I'd go to the doctor. I'd say, what's wrong with me? He says, you're fat. And I said, well, I think I want a second opinion. He goes, all right, you're ugly too. So I was learning candlesticks back when there was nobody around doing candlesticks, and it was at that point when you had all these people telling you how they've learned the secret of investing and through the internet, and they would sell you programs. And I'd have to, when I started learning candlesticks and training people, I'd have to say there aren't any secrets. This has been around for 400 years, and it's just common sense put into a graphic depiction. So the only thing you really need to know is learning what the graphic depictions are telling us. We're short DIOD because of the big bearish left-right combo, but look where our stochastics are. They're getting toward the oversold area. We're sitting at a support level area. We're sitting at the 200. Tells me if they don't break this down, you're ready to close this out. The probabilities are going against you. Still has some dish as our short position. So the rhetorical question is, why do you have short positions on when the market looks like it might be turning up? Because the market might turn right. So it's prudent to have a few short positions on in case that the market doesn't do what it looks like it's supposed to do. We're short CNX. Big left-right combo. Breaking this support level. Still some more downside. Okay, let me see what questions I've missed. Are your trades good for the day, or do you leave them for more than a day as long as it's making money? If I'm buying a signal, I stay long until I see. If I'm buying on a buy signal and staying long until I see a sell signal. Now, that is a basis of how you trade. I'm a swing trader, so most of my positions last anywhere from 2 to 10 trading days. This also, no, it wouldn't be. This could be a 5-minute chart, a 10-minute chart, an hourly chart, whatever time frame you want to trade. But yes, if I'm buying on a basis that this is a buy signal, I'm going to hold it for as many days as it tells us there isn't a sell signal. That's right. An average trader makes a trade and feels good, but a great trader makes a trade and feels nothing, as in cold and act, no emotion. Yes, it should all be mechanical on a basis of the first thing you have to be confident in is that human emotions work the same way time after time. The reason we're looking at patterns is because human emotions work the same way time after time. That's what creates the patterns. And so if we just identify the patterns, knowing that's going to be the same way human nature reacts in this next trade, it just puts us in a situation where I constantly tell people prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and candlestick signals are just merely the graphic depiction of what's going on in investor sentiment. Well, that will be the trade that goes to zero next day. Yes. There's the old, people say, well, I saw it pulling back, so I doubled up. And it pulled back some more, and I doubled up. The fallacy of that analysis is, if it's pulling back, why are you in it in the first place? If it's not doing what it's supposed to be doing, get out and move on to something else. Until the great trader uses the profit to buy a collectible car. Okay. I've got some for sale. I don't have enough. That's right. I'm only 39. I don't have enough room in the barn for the cars anymore, so I've got to. Yeah, Hawaiian Bob. That's what I found out about brokerage firms. Brokerage firms are in the business to make money, not necessarily for you to make money, for them to make money. Are we in a bull cycle? I don't think so yet. Let's make this very small. Up. Well, for crying out loud. You can see what's happened here. Big, strong move for 15 months. Now you've got consolidation going on. What's the next prospect? Well, when they come up through this level, it might be then wave 1, wave 2, going into wave 3. Diana, that's your benefit. I tell people, if you learn from your mistakes, I'm one of the smartest traders you're ever going to come across, because I've made so many mistakes. And my first mistake years ago was not listening to what the charts were telling me, what the signals were telling me, because I thought it should be doing something, or the experts on the financial news stations were saying other things should be happening. And what I learned was that the market, that the right opinion is nothing more than the market itself. All we have to do is analyze what the market itself is telling us. If you get in a stock due to a buy signal and it trades up and down just above the entry price and just below it, how long do you stay in, or do you wait for a sell signal? If something, let me see if I can figure out. If I'm buying something, you can see this. Let's say this was our bullish signal and we bought here. We've got very simple rules. Well, the Japanese rice traders give us very simple rules. If this is the buy signal that told us the bulls were in control, and they're able to close it more than halfway down the candle that told us the bulls are in control, it means the bears are still in control, close it back out. That's part of that sage advice that most money managers give you that say, cut your losses short and let your profits run. The only problem with that is they never tell you how to cut your losses short and let your profits run. It's very simple analysis from candlestick analysis. Who's in control, the bulls or the bears? The halfway point is a very important factor. And the T-line, this 8 exponential moving average, is if we're buying, we don't want to see it close back below the T-line. Not bull. We are in honest. Proves that we have inflation. You looked at candlesticks and it made sense. Now it makes dollars. See, That is inflation. All right. What is the difference between using either solid up or solid down versus solid and hollow? Oh. A candlestick signal or graphic is that if it opens here and closes here below where it opens, it's a red candle. If it opens here and closes above where it opens, it's a green candle. That does not necessarily mean that it's up or down for the day. I'm see if I can find something that illustrates that. Well, here's an example. Notice that this one closed here. The next day they opened it up here and closed it here. It was a down day, but it was still up from where they closed it the previous day. What the candlestick formations are being created by is where it opens and where it closes. And those are what create the signals and patterns, or telling you what's actually happening in investor sentiment. Let's see. It's just a preference. Some set their easier, faster to recognize. Yeah, so some of my charts, for example, the dark candle is down, the white candle is bullish. So it all depends on how you set up your chart. We are in a descending triangle pattern. Yes, the important factor that we're looking at is that we are in a kind of a wedge formation. So with that analysis, what is our assumption? Until we break out either to the upside or the downside, we're probably moving sideways. Is there a particular scan you run daily? Mark, right now it's a very simple scan. I just look at which stocks have had the biggest percent move to the upside. Because we are in such a bullish market trend that any stocks that are probably in the oversold condition are probably there for some reason. So I just use a very simple scanning technique of which stocks had the biggest percent price move. And usually within the first 20 charts, I'm going to find 4, 5, 6, 7 good candlestick reversal signals. People who don't make mistakes probably don't make anything. Yeah, that's right. That's what when I became a stockbroker, that's what I thought my life was going to be, is sipping mint juleps on the back of my client's yacht in the Fort Lauderdale Basin. Unfortunately, a stockbroker is just a different salesman than a Xerox salesman. If you go to 15-minute chart, are you getting better sell signals very often, even on good charts? Felix, if I've got something, first of all, if I'm buying based upon a candlestick daily buy signal, I'm selling based upon a candlestick daily sell signal. However, and this is what we kind of do in our members training on some of the Wednesday night sessions of when to sell. For example, if this gapped up tomorrow up here, knowing that we're way up in the overbought area and it gapped up again, then I flip to my 10-minute chart. What I want to see on my 10-minute chart is that they're continuing to buy. If I see a sell signal and a close below the T-line on the 10-minute chart, that means it's time to take some profits. Can you explain the reason for the 34? It's the EMA, 34 EMA. It just seems to work, and it works more over in the commodity and currency side than in the stock side. But it seems to work reasonably well. So I use it, just kind of confirms, but it's not. The two major ones are your 50 and your 200. Those are the ones that every major money manager around the world use to make their decisions. How did you build your confidence or remove your fear in this business? After a while, my conclusion was, not my conclusion, the results were that no matter what I thought, the chart was usually correct. Because you've got to remember, the chart is the accumulative knowledge of everybody buying and selling during a particular time frame. And I discovered that the charts were right an extremely high percentage of the time, so that I finally got to where my trading was, do what the charts tell me, not what I think should happen. And I discovered that the more I let the charts tell me what was going on, the higher the probabilities that I was going to be in a correct trade. Higher high and higher lows at the close of the day. Does that mean next day could go up? Sonny, that makes no difference. I'm usually looking at what the final daily chart looks like. Okay, I guess with that, Jim, go ahead and do the double line. And in 4.2 seconds, do the next double line. How far out do you buy your options? That, again, is up to each individual, how much risk-reward. Usually I'm buying relatively close options. But my relatively close options usually are the next monthly, because I don't have it. It depends on what your schedule is. I don't have time to watch the weeklies. But if I think that something's going to move very quickly, I might go a week out or usually 2 weeks out. Baba, I wouldn't be trading this one. This one is sideways. I'd be someplace else just because there's no direction. NTLA is still one of the ones that you want to stay short. But if this opened positive tomorrow with kind of it basing in here, I'd cover the short positions. Apple we did. It's the weak sister. If you're short, you stay short. But notice you had an inverted hammer in positive trading. If this came back up through the 200, I would probably close out the position on a short position. The Qs, again, if this opens positive, you're probably coming back up to the 50-day moving average. Oops, you keep scrolling past me here. AAN, this one you go short if it opens lower tomorrow. You got the doji gap down. Where did I go? I've lost. NSC, kicker signal, you're probably in a 45 degree. You stay long, but I wouldn't want to see it close back below today's low. That would tell me the bulls haven't kicked in. Pink, kicker signal coming out of a fry pan bottom. That one you can be buying. That's a good looking chart. Anytime you see a kicker signal, the probabilities, especially coming out of a fry pan bottom, what do we expect on a breakout of a fry pan bottom? A very strong price move. Kicker signal is your strongest signal. Weyerhaeuser, this one you can be buying. You won't make a heck of a lot of money, but it's got a J-hook pattern, so you're going in the right direction. QLD. Again, the Qs needs to see positive trading. You can see what's happening. They're obviously supporting right off the 200-day moving average. CRUS, another one that if you were short, I'd be covering the short on strength, but I wouldn't be buying it until it gets up above the T-line. White, you stay short until you see a buy signal. You can see the bearish J-hook pattern in progress. UCTT we did. There's your best friend. You can buy this one on strength. And STL, kind of a double bottom. Stay long. I wouldn't be buying here, but you can stay long, but you need to see it get up above the moving average. And Ultra Group, stay short. Now you're in the oversold condition, so a very safe spot or a very safe technique is if you're short and you're in the oversold, you simply put your buy stop to cover at today's open. If it comes back up through there in the oversold area, obviously that's where the bulls have taken control. HTGM, another little fry pan bottom. You can buy this one on strength. Veil, J-hook pattern in progress. Another one, this is your classic. Fry pan bottom, J-hook pattern. Bolero, just stay long. Notice your left-right combo that started your uptrend. You stay long as it doesn't close below the T-line. Ford's had a hard time getting moving. Did gap up. If you want to buy this one, you can buy it on positive trading, the simple doji rule. But I'd be more apt to buy it if it gets up through the 200-day moving average. Cato, another one that looks like it's setting up your fry pan bottom. If you're long, stay long. If you're looking to go long, I'd put a buy stop at 17. If it comes up through there, wave 3 is in progress. Now ISRG, another Morningstar signal. You can buy this one on positive trading. I think we did this SPY, right? Got the Doji Hammer gap up today. Again, all the indexes had very strong buys, but they still had to break out of their wedge formations. Freeport, get ready to cover your short position if this trades above today's high in tomorrow's trading. After today's hammer harami, get ready for covering short positions. VCEL, look for a breakout. I'd be ready to buy this one on positive trading, telling me they've broken out through the resistance level. Here's one, I wouldn't be doing anything with this one, not until it gets back up above the T-line. Another one, you can buy it if you like it. It's just not a very resilient chart. I'd probably be someplace else. AMD had a strong chart, kicker signal. You can buy this one on positive trading tomorrow because that would tell you that probably your next target is the 200-day moving average. And RES, nothing here. Oh boy, if I was short, I'd cover the short position on positive trading, but I wouldn't be long or short this one. There's just nothing to that chart that tells you who's in control. VIAB, another one that I wouldn't be long or short. There's absolutely no direction on this one. Kroger, you can stay long. Use the T-line as your stop. With futures and with stocks, so will you exit if it is below the T-line on the 10-minute chart? And will you re-enter just as fast? The only time I use a 10-minute chart is when you're in the daily chart is well in the overbought condition and you've started to move away from the T-line. Then I flip to the 10-minute chart. When you start moving too far away from the T-line, remember the simple T-line rule. The further away you move from the T-line, the higher the probability it's going to come back and test it. TMUS. Nothing wildly exciting on this one. If you like it, you can stay long. You're just not going to make a whole bunch of money. Nally, you can be buying this one, but you'd probably be more buying it because of the dividend yield, not because of the price move that it might be making. Mara, another one you can be buying. Make sure your volume is up pretty hefty, as long as this stays above the T-line. And EP Energy, same scenario. You stay long as it stays above the T-line. We did the Qs. Look for positive trading tomorrow. Intel, little kicker type signal. I'm sure it's going to be pulled up with the other tech stocks tomorrow. KL, you can get ready to buy this one again. The gold stocks are, I don't know why they'd be acting very strong. Gold is still kind of drifting. Chipotle, big gap up. Expect a 45-degree off of this one. CBay, nothing here. If you're short, you stay short. We do this one, HTGM, yes, you can buy this one. GE, nothing exciting. You do have kind of a fry pan. It's just such a not a very exciting trading stock. Same scenario with AT&T, except they've apparently missed something. If you want, you can be shorting this one on weakness with today's bearish kicker signal. And TSM, you stay short. However, you got an inverted hammer, which means if they open this positive tomorrow, the probabilities are 90%, 95% or greater that it's going to start moving positive. This one you should be out of. The fact that they could gap it up and then bring it right back down, that tells you, the bears are in control. You should have closed this one out, because there's that's not a good signal there. Not a good bullish signal. Best Buy, you can stay long. Once again, you're not going to make a heck of a lot of money with this one. These institutional traders, you're not going to make a whole lot of money. Same scenario here. There's nothing here. After they gapped it up and brought it back down, and now you're back into this trading range, I'd be someplace else. There's better places to have your money. MRN, that one's not working. VRX, we're just hanging on to because it looks like it's starting into wave 3. Guild, another one that, it's just not anything worth trading. There's no direction to this one. I'd be someplace else. NS, that's a good looking little chart. You can be buying this one on strength because of your kind of your cup and handle. And SH, did I just do that one? What's the first one I did? I guess they're both the same. Adobe, nothing. That's a sideways chart. I wouldn't be a buyer of this one until it breaks up through the 235. If didn't see this, wondering, see with futures or even with stocks, so you would exit if is below the T line on the 10-minute chart. No, you don't exit off the 10-minute chart unless your daily chart is telling you you're too far away from the T line. If you're buying based upon a daily chart, you sell based upon a daily chart. If you start moving too far away from the T line, which is one of your warning signals, and then you see that's your 10-minute chart, then you flip to your 10-minute chart and use that to tell you that once they come back down through the T line on the 10-minute chart, it's probably time to take profits, even though your daily chart hasn't produced a sell signal yet. Nothing here. That's as flat as a pancake. I'd be someplace else. Kind of the same scenario here. Wouldn't be long or short this one right now. So anytime you can visually see they're not going anywhere, here's one that's gapped up, beat. Look for a 45 degree to come off of here. HRTX, just stay long as you stay above the T line. Light, you stay short until you see a buy signal. Now, you've just climbed or just gotten down to the oversold area, so if I was short, I'd have my sell stop at today's high. It shouldn't come back up through today's high. Wind Resort's another one that I wouldn't probably be long or short. If I was short and it opened positive tomorrow, I'd definitely cover it, but I wouldn't be going long. Not until they can show a good, strong buy signal. HIMX, another one that, boy, that's a toughie. If you're short, it needs to open lower and trade lower. If it opens positive, close out the position. It's showing too much support. PNC, one of the banks that he had a Morningstar signal right off the T line, followed by a doji sandwich, which is your McMuffin. You stay long, but here's what you got to break through: is that downtrending channel. Walgreens, nothing exciting here. If you like it, you can stay long. It needs to get up through the 50. We did Home Depot. Broke out nicely. Look for a 45 degree. Grub was trying to support on the, on the 50, which it didn't. I wouldn't be long or short this one right now. Nothing there. CRS. There's your kicker type signal, J-hook pattern. You can buy this one on positive trading. With this being wave 1, notice wave 1 started with a left-right combo. Kicker signal going into the next wave, so if it trades positive, it's breaking out through there, telling you wave 3 is in progress. Data, nothing real exciting. You shouldn't be short. You can go long. It's just not a very exciting looking chart as of yet. This one's got the little slow curve. You can buy the thing. Verizon, stay long. AAXN, if this opens lower tomorrow, Ralph, you can short it. Yes. MGM. Yeah, be ready to short this one on weakness. TripAdvisor, stay short. Nothing, you stay short until you see a buy signal. And CLVS, you stay short. However, you've done a doji, harami, in the oversold area. Your safety stop should be just above today's high. Dunkin' Donuts, you stay long on this one. Just not going to make a whole heck of a lot of money with it. Andre, it's all visual. For example, you can see how it's kind of held the T-line until you started getting up here in the overbought area. You could tell you were kind of moving away from the T-line. GNC, nothing, that's just a fine howdy do. That's a dull stock. I'd be someplace else. Nothing there to tell you who's in control. Alta, just stay long. Now you're in the overbought area, so your safety stop is right here. If they have enough strength to bring it back down through that level, close out the position. PL, bullish engulfing signal. Another one that if you had been short, get ready to cover this if it comes up through the T-line tomorrow. Are you buying the stock or purchasing an option? I don't know which one you're referring to, Mark, but that's up to each individual. If you're an option trader, you use the underlying stock to make your decision to buy options. If you don't like trading options, you buy the stock. O'Reilly's, big gap up. Look for a 45 degree. GPN, nothing exciting here. You do have a Morningstar signal. You definitely need to see it break through the 50, which breaks through this level. Once again, you're not going to make a whole big percentage return off of that chart. Match group, all you can do here is stay long as it stays above the T-line. Whiting, stay long as it stays above the T-line. JP Morgan, nothing. Wouldn't be long or short this one right now. Just no direction to it. Schlumberger, you can get ready to buy this J-hook pattern. If it opens positive tomorrow, you've got a bullish doji sandwich setting up, which would confirm your J-hook pattern. And here's a bobble breakout on IMO. You can buy this one on positive trading. The probabilities of a strong move after a bobble breakout is extremely good. UCTT, best friend, buy this above the 50. Disney, nothing. No direction. I wouldn't be long or short. Dollar General, you can start buying this one, but same scenario. Well, I guess there's probably a better percentage, but nice little J-hook pattern setting up. Target, that one needs to see some strength. Otherwise, there's nothing on that chart. Let's see. I don't know what Dollar Tree is. DLT, ETL. I forget what the symbol is for Dollar Tree. Okay. Expect some more upside, but don't expect anything major until they can break through the 50 on the Dow, which would also coincide with breaking. Oh, there it is. ELTR. Dollar Tree, another one that probably wouldn't be long or short. There's just nothing there. And the NASDAQ is probably going to get the most influence tomorrow with Amazon up big. I didn't see what Microsoft did. I saw Microsoft improve something by 17%, but coming right after Amazon's report really didn't have the same excitement. So with that, everybody, have a good evening. We'll see you bright and early in the chat rooms.